Welcome back to our weekly newsletter on the economy, where we bring you the latest updates on business and economic trends. Today, I will take you on a journey through this week's newsletter. To receive our weekly newsletter and stay informed on the latest economic developments, simply follow our website in the description below. Firstly, starting off with India, where the economy continues its impressive growth trajectory. In the April-June 2023 quarter, India's GDP surged by 7.8%, driven by robust performances across various sectors such as manufacturing, construction, and services. Notably, industrial production marked a 5.8% year-over-year increase in September. And now shifting gears to Germany, findings from the Autumn Economic Survey by DIHK reveal concerns among businesses. Over half of the surveyed companies, approximately 51%, cite economic and location policies as hindrances to their development. The managing director, Martin Wansleben, expressed worry about this trend, with only 13% anticipating business improvement in the coming year. Moving to Turkey's international investment position in September, where we observed a decline in external assets. And despite these changes, the net IIP showed improvement, reflecting fluctuations in reserves, investments, and external loans across sectors. In Moldova, positive economic news as industrial output saw a consecutive increase for the second month, rising by 1.5%, a promising trend signaling potential growth in the country's industrial sector. From your Chamber's Economic Survey 2024, it's apparent that challenges persist. Though there is a slight improvement in the business climate from the previous year's low, issues such as sourcing energy, labor costs, and skilled worker shortages remain. The IEA's latest report underscores the rise of clean energy sectors, driving job growth globally. Clean technologies like solar PV, wind, electric vehicles, and more are contributing significantly. However, the report highlights concerns about shortages in skilled labor. Initiatives focusing on education and policies aligning with clean energy goals are crucial to meeting this rising demand. Let's turn our attention to the UK, where the British Retail Consortium reported a delay in Christmas spending. October retail sales experienced a slowdown due to weakened consumer confidence triggered by increased housing costs. While high-ticket items like laptops saw declines, sales in cosmetics and toiletries remained robust. This phenomenon, known as the lipstick effect, indicates that amidst rising expenses, people tend to indulge in smaller luxuries. Shifting focus to Georgia, the producer price index for October rose by 1.8%, primarily driven by manufacturing growth. However, specific sectors like mining and quarrying witnessed a decrease in product prices, contributing to a marginal decline in the overall monthly PPI change. Considering the impact of artificial intelligence on the job market, it's evident that AI adoption is set to reshape employment landscapes. According to the Future of Jobs survey, nearly 75% of surveyed companies plan to embrace AI and big data technologies in the next 5 years. While this adoption may lead to the job growth in about half of these organizations, roughly 25% anticipate job losses, particularly in roles involving repetitive tasks, clerical work, and data entry. The surge in AI is expected to create opportunities in roles related to AI specialists, automation, and digitalization, demanding the acquisition of new skills for the evolving job market. And breaking news from Portugal as Moody's upgrades the country's credit rating to A3. With a favorable outlook, Portugal's credit rating shows promising growth, aligning with similar ratings by Standard & Poor's and Fitch. The improved rating reflects positively on the Portugal's economic performance. In Canada, foreign investment experienced a downturn with a reduction of $15.1 billion in Canadian securities in September. Conversely, Canadian investors acquired $11.6 billion in foreign securities, resulting in a net outflow of funds totaling $26.7 billion from the Canadian economy. Shifting to Malta, where inflation saw a decline, hitting a 21-month low at 4.2% in October. This decrease from 4.9% in September reflects a declining trend in the annual rate of inflation. In Belarus, industrial production in January-October reached 153.6 billion, marking a significant increase of 108% in constant prices. Turning our attention to digital currencies, the IMF highlights the evolving phase of central bank digital currency development, exploring the potential of well-designed CBDCs. The IMF stresses their role in enhancing payment systems inclusivity in financial services. With several countries already delving into CBDC implementation, the IMF offers guidance and resources, emphasizing their impact on monetary policy, financial inclusion, and global economies. Shifting gears to the EU car market, October marked a substantial surge in registrations. An impressive 14.6% increase. Electric car sales notably skyrocketed, showcase significant growth. However, diesel cars continued their decline, dropping by 13.2% compared to the previous year. And in Albania, October witnessed an 8.8% increase in export value compared to the September, albeit a 4.3% decline from the same period the previous year. Meanwhile, it's marked a decrease of minus 6.3% compared to the prior year and 6.5% increase from September. Discussing EU business trends, the third quarter of this year saw a 5.8% drop in bankruptcy declarations compared to the previous quarter. Despite this decline, the overall number of bankruptcy declarations remains higher than pre-pandemic levels. According to the 2023 and 24 OECD Global Economic Forecast, the global economy is expected to grow at 2.7% with core inflation around 2.8%. Monetary policy challenges and potential slowdowns in China pose significant downside risks. Urgent structural policy reforms are encouraged to boost growth, address fiscal pressures, and revive international trade. And in Turkey, consumer confidence soared to 4-month high, climbing by 1.1% in November to reach 75.5 on the Consumer Confidence Index. The rise reflects positive sentiment, demonstrating growing confidence among consumers. Moving to the Netherlands, business confidence experienced a slight dip in the fourth quarter of this year, primarily seen in transportation and manufacturing sectors. While concerns over insufficient demand linger, entrepreneurs are looking optimistically toward 2024, projecting increases in turnover, staffing, and investments. In Belgium, November brought a slight uptick in consumer confidence, marking a gradual rise since summer. However, while overall economic outlook improved, household saving intentions saw a decline, tempering the positive momentum from the previous month. In Turkey again, the unemployment rate declined by 0.5 percentage points to 9.2% in the third quarter, reflecting a positive shift in the labor market during this period. Portugal's tax reform is under scrutiny due to its potential impact on the country's thriving tax sector. The proposed changes to tax schemes raise concerns among beneficiaries, sparking debates about their necessity and the nation's overall attractiveness beyond tax incentives. And now shifting focus to South Africa, we are going down. The country's business cycle indicators showed mixed signals in recent months. The leading indicator increased by 0.6% in September, driven by positive contributors. However, the coincidence indicator showed marginal growth in August, while the lagging indicator declined by 0.7% in the same period. Now I'm going to Denmark. Its manufacturing confidence touched an 11-month low, declining to -16 in November, signaling a notable downturn in business morale. And lastly, Latvia faced an 8% dip in exports in January-September, aligning with 14 other EU states experiencing similar decreases. Conversely, Cyprus and Malta exhibited the highest export growth during this period. That wraps up our economy newsletter for today. We covered a wide range of topics. Stay informed and tuned in for more economic news in our upcoming episodes. Thank you for watching and remember to subscribe to our channel for the latest updates.